Okay, so what if I told you that the single best investment of 2025 had absolutely nothing to do with AI or crypto or any of the usual tech giants? This year, the market told a story that honestly caught almost everyone by surprise. So let's dive in and break down exactly what happened and, more importantly, why. Let's just start with one number, 212%. That was the return of the best performing non-leveraged ETF in 2025. I mean, think about that for a second. That's more than tripling your money in just 1 year. It's an absolutely staggering figure. So the immediate question is, what was it? You'd think, okay, it's got to be some hot new AI stock, right? Or maybe a biotech breakthrough, a crypto fund? What could possibly deliver that kind of insane return? Well, the answer is probably not what you're expecting. You gotta forget all the headlines about tech and AI for just a minute. Because when we pull back the curtain on this year's top performers, a very different and actually much older story comes into view. That's right. The dominant story of 2025 wasn't about silicon, it was about silver. It wasn't about software, it was about gold. It was a year that was completely, utterly dominated by precious metals. Just take a look at this list of the top 20 funds for the year. You don't even need to know what the ticker symbols are. Just scan the names: silver miners, gold explorers, junior gold miners. It is an absolute wall of precious metals. This wasn't just some little trend. This was a total takeover. And I'm not exaggerating. This wasn't just a win. It was a clean sweep. The entire top 15 spots, all of them, were taken by funds tied to precious metals. It was the single most dominant investment theme of the year, and it wasn't even close. So, the next logical question has to be, why? Right? Why this sudden, massive surge into what a lot of people consider an old world asset? Well, as it turns out, it was a perfect storm of global factors all hitting at once. And gold was really the anchor for this whole move. You can think of it as the heavyweight that got the momentum going. A powerful cocktail of economic and geopolitical drivers basically lit the fuse for gold, and once it took off, the other metals were right there with it. So what was in this perfect storm? Well, first, you had all this global uncertainty, military conflicts, trade wars, that pushed investors towards assets they see as safe havens. At the same time, right here at home, there was this growing anxiety over massive government debt and inflation that just wouldn't seem to go away. You know, when people start to worry their money will be worth less tomorrow, they often turn to gold. All of that combined to create the perfect recipe for a modern-day gold rush. But here's where the story gets even more interesting. If you look at this chart, you can see that while gold anchored the whole thing with an incredible 71% gain, it wasn't even close to being the biggest winner. Once the gold rush started, investors scrambled for anything related, and that sent silver and platinum into complete overdrive. They both more than doubled gold's return, soaring by 149%. Okay, but even that doesn't get us to that 212% number we started with. To understand that, we need to look beyond the metals themselves and at the companies that actually pull them out of the ground. This really is the key question. If silver was up 149% and gold was up only 71%, how on earth did the top ETF manage a 212% return? The answer lies in a really important concept called beta. So in investing, some stocks basically act like a lever on an underlying asset. They're called higher beta plays. For a miner, their profits are extremely sensitive to the price of the metal they're digging up. So if the price of gold goes up by, say, 10%, a mining company's profits might jump by 30 or 40%. It's this leverage effect that means their stock prices can take a much bigger leap. And here is that lever effect in action. It's so clear. On the left, you've got the return for physical gold itself, 71%, solid. But on the right, you see the return for an ETF that just holds a basket of gold mining companies, 166%. That huge gap is that magnifier effect we're talking about, clear as day. So now we have the full recipe for that incredible 212% return. It combined the two most powerful forces of the year. You take the incredible surge in the price of silver, and then you add the magnifier effect of the mining stocks on top of it. And that's how the iShares Silver and Metals Miners ETF hit that number, with the amplified Junior Silver Miners ETF right on its heels. Now, precious metals absolutely stole the show, no question. But they weren't the only big winners in 2025. So to get the full picture of the year, let's take a quick look at a few other sectors that posted some really massive returns. Copper had a fantastic year, with prices jumping 43%. This wasn't just about geopolitics, though. This was a story about real structural demand coming from the global energy transition and all the new electrification happening. And yes, the AI revolution continued to roar. This actually drove the entire South Korean market up 90%, basically because companies like Samsung and SK Hynix build the high-performance memory chips that are the essential building blocks for AI. Now here's a fantastic story of adaptation. The Bitcoin mining ETF surged 88%. Get this, even while the price of Bitcoin itself was down. So how is that possible? Well, these companies realized their powerful data centers, which they built for mining crypto, were also perfect for training AI models. They pivoted and found a hugely profitable new business. So when we put all these pieces together, the metals, the miners, the industrial commodities, and these surprising tech plays, what does it all tell us about the major themes that really defined the market in 2025? It seems like four clear narratives really emerge. First, there was a classic flight to safety, driven by global risk and economic anxiety. Second, a hunger for real assets to hedge against inflation and debt. Third, the undeniable structural demand for materials needed for the energy transition. And finally, the enduring world-changing power of the AI infrastructure build-out. So, this leaves us with a really fascinating question for the future. In a single year, we saw these massive returns from both old-world safe havens like gold and new-world tech revolutions like AI. So was 2025 just a strange outlier, or does it signal a fundamental shift in the market, a new era where physical assets and digital intelligence are equally powerful forces? That's the big question to consider.